Greetings, everybody. This is Jeff Scott, and welcome to this week's edition of my top-down review. It is 12/11/2016, and it's approximately 2 p.m., and I don't think the oil information is coming out. I think the non-OPEC countries are voting today sort of to agree with OPEC, and obviously at this hour, futures are not out either. I've entitled today From Melt Up to question mark, and the question mark could be anywhere from continuation, consolidation, correction, or rotation. And I think, this market is long in the tooth. We're certainly in a seasonally strong period of time, sort of unprecedented times, with Trump and the Republican sweep. Talk of tax reductions, repatriation of overseas taxes, making America strong again, putting liquidity into the economy, all things that seem to counteract the potential negativity of the impending rate increase. Disclaimer, this is for education purposes only. Anything recommended through education, not investment advice. I'm a doctor, not a broker. I'm not affiliated with any software vendor or trading company, and trading involves risk. You and your loan are solely responsible for any investment decisions you make. Although sometimes I talk about extra computers, I don't sell anything. I don't sell indicators. I don't sell education, except for a couple live meetings per year, which right now there's nothing planned as I've gone back to work because I was bored in between those live meetings. I like to entitle my approach to trading as Be Your Own Guru, and I have a few key influencers on my style. CanSlim, which was started with O'Neill, made better by Morales and Catcher, taken to the computer by Ian Woodward and Ron Brown, and improved. And then John Person, who's become a friend, but also mentor, trader, developer of indicators, super smart guy, and really has helped me go from just knowing what a good stock was to when to buy it, how to manage it. Speaking of managing it, the guru for money management is Van Tharp, and this is my buddy George Lee, a smart Canadian trader who I spend some time at the podium with. I own a lot of programs. Give me TradeStation or Thinkorswim, and I'm happy. Give me both, and I'm more happy. Genesis is a great platform. It can do a lot, but it's also expensive, and I think most people probably don't own it individually unless you're been trading for a long time, futures trader, etc. On analysis, I like to use HGSI and EdgeRater. I supplement it with seasonality trading in various websites. Here's the HGSI website. Again, I'm independent. I get no commissions. But if you go there, it's a free 30-day trial, highgrowstock.com. If you click under Investing Strategies, you'll see my name with a number of videos. Ron Brown is also great. Here's Gil Morales. He actually uses the program. Morales, author, also a great trader. And I think Monday's actually got a video to introduce the market on Monday on Benziger or something. Stock patterns are cyclical. Where are we? Man, we have gone from down here to up here between 11.6 and now. And will we go higher? Will we consolidate and go higher? Will we sell off soon? Or will we just switch what's leading and have the others pause for refresh? I think all those are reasonable options. I did last week, after Wednesday's big move in my portfolio, I actually took profits, I rolled my calls up, meaning I took profits off them, put them at a higher strike price. For example, if I had some $13 or $14 U.S. Steel calls, I think I brought them up almost to at the money, sold some calls out of the money, and bought a put close to at the money because I think this is a dangerous time in the market. And that's a strategy I like to do, although when I'm playing options, taking profits has got no tax issues at all. This is a funny year. One usually expects this time of year to have a lot of tax loss selling and gain selling. I think you'll see losses selling this year, but with taxes potentially lowering next year, I don't think we'll see as much of the tax gain selling. Bottom line is you have to know where you are. We're getting back up to the shoulder, and as I said in my introductory comments, we can go many different ways. That means as we've gotten up here, my positions will get smaller. I will sell premium out of the money both ways. And in scenarios where I have a lot of profits that I'm not yet taking, I may take buy some protection with some collars. If I look at Friday's sector review, one could see a lot of strength in the market. Utilities and staples, both almost all green. That can't be good for a market outlook. Gold, home builders, certain properties were red. The casinos rebounded after the discussion about the Macau limiting the ATM withdrawals. Retail was weak. Banks were mixed. Materials mixed. Energy still showing some signs of strength. So it was really a mixed day on Friday. I don't think my portfolio did much. It had some up and some down. Major markets tell an important story. The next two views are from Thinkorswim. Simple views, candlesticks of E-minis, NASDAQ NQs, YMs, the Dow futures, TF, the Russell futures, the VIX futures, and the dollar futures. And on my moving averages, the green is a 17, the yellow is a 50, the red is 200. The blue arrows are PPS buys, the yellow arrows are PPS sells. And what you can certainly see is we've had just massive moves. This here is the overnight futures trade after Trump's election. So really, the market started moving 2 days before the election, or on Monday. Tuesday didn't do much. Wednesday, the big sell-off before the market opened, and it closed at or near the high of the day. And we've been in a nice bull market since. We did have one pull back here to the 17. We're clearly extended. Is this a blow-off top? Time will tell. It's certainly been a nice blow off. Here's the NASDAQ futures. Again, started moving before the election with a buy signal. Sold off down to the 200 daily overnight with the election win for Trump. In a PPS buy signal now, lagging the others, just about to take out prior highs. The Dow futures have been big leaders. Look at the move you've had here. And again, a buy signal coming in on Monday, and then Wednesday trading down, and then rocketing up since then. That's been another massive move, similar to the Russell futures. A pullback in here, similar to the S&P 500, a buy signal. And, one of these sort of a bull flag here, followed by a buy signal and a breakout to new highs would certainly be something interesting. VIX remains low, and the dollar ran up, pulled back some, had a bullish move on Friday. It's holding near its recent highs. I think it's up about 2.9% for the year. Other things to point out here, there was something I was looking at. We had a doji on Friday on the Russell futures. That could be something. A low close doji would be a closing price on Monday or Tuesday or Wednesday that closes below the low of the bar on Friday. Actually, this is daily, so yep, it would be 3 days. I look at the weekly charts. I think it looks a lot less like a bull-off, except for in the YMs, maybe the TFs, but the kind of looks like a relatively orderly move up on the E-minis. And again, the NASDAQ's been in congestion, hasn't taken out new highs. If I look at my Genesis, where I could look at the E-minis, the Russell futures, the NASDAQ futures, the NYSE, and the Dow futures, top row daily, then weekly, then monthly. The important thing here is I believe everything is in a buy on multiple time frames. This is a very bullish period for the market. And hopefully, as you see your December statements for November coming in, that you will have had a nice month. And if you actively are trading, hopefully you've been rewarded. Rates are rising. Will 25 basis points do anything to the market here? I think it's priced in. The interesting thing would be if they didn't raise, that would be telling us there's weakness in the market that we're not aware of, and I think that would cause a bigger sell-off. And what if they raised 50 basis points? No reason why they should, except concern maybe that some of the Trump policies will be inflationary. I don't think they do, but you know what? After an initial sell-off with shock, that might be a signal that there's some strength in the economy. I'm looking for a 25 basis points, so is the rest of the world. AD lines on both the small stocks on the left, the big stocks on the right to new highs. Breadth is getting overbought. This line here on the stocks above the 200-day SMA has been where the market has reversed in the past, and it broke above that line. Here's the stocks above the 40-day, not quite as high as it gets. But again, we're getting to series where we might expect taking a breather. I've learned that stocks have a tendency to get more overbought. You can go sideways and work off the overboughtness. It doesn't mean the market has to collapse. 3-month new high, new low. The peak is where that green arrow is. This has been like clockwork. We can only get so many stocks with new highs versus new lows over the last 13 weeks. We're getting close. And when that hits that bar, I know the market will sell off. It sells off every time. So I'm paying attention to that. Again, more why I think we're going to see either continuation or more likely consolidation, correction, or rotation. The daily McClellan, the candlesticks are the spiders. The white line is the NYSE. And you could see both of them are out at new highs. The McClellan oscillator is not at a high, so it's not at an extreme. Interestingly, the sublation index is still below zero. This is the daily. Similar things could be said on the weekly. Again, I look for extremes. I see reversals when I get too high or too low. I look for divergences, and I think you could say there's somewhat of a divergence as the indexes are making new highs and the oscillators and summation index are lagging. Current buckets, talking about evidence of overbought and oversold. This is where we were 11.2. This was pretty much the low point of the market. Now, I actually started buying before the election for a couple of reasons, but one of the reasons was when I saw this picture. And I knew that we were probably going to have a recovery or a up move within a couple of days. Now, so what I'm looking at here are two different things. The pie shape adds up to 100, and if you take the S&P 1500 and look at where the stocks are within their Bollinger Bands, it tells me what percent in green is above the midline of the Bollinger Bands and what's below. If you take those 1,500 stocks and see where they are between the bands and add a bucket, we call it for below, and a bucket for above, I can put the stocks in their various buckets. So what I saw on 11.2 was 77% of the stocks were trading below the midline of their Bollinger Bands, not unusual in a downtrend. But I started seeing over 20% of the stocks are below the lower band. Since I know that stocks live above or below the lower band less than 10% total during the year, when I start to see 1 out of 5 stocks in the market above or below the Bollinger Bands, you know the market's going to move the opposite direction. A week afterwards, after the market moved on the 14th, you could see that we got the other way, where 76% of the stocks were above the bands and 40% were above were above the top of the Bollinger Band. So again, we know the market has had some up and down days. When you see this, typically it goes sideways, and you could look a couple weeks later, we'd worked off some of that, and we start to get more of a bell-shaped curve, still bullish with more stocks above. Here's where we are today. 25% of the stocks are above the top of the Bollinger Band. 87% of the stocks are above the midline of the Bollinger Bands. This is an extended market, and I expect to see either sideways, which will allow the bands to catch up, and the percent of stocks above to come down. And a sideways market could either be consolidation of everything, or it could be pullbacks in the leaders and move-ups in the laggards. So the indices stay the same, but you get some rotation out of these overbought stocks. Hindi, I think the more important thing is that we're about 10% of the stocks in the NYSE or above are at new highs, and close to 20% in the Russell 3000. Again, signs of a market with exuberance. No Hindis have been seen, and Hindenburgs are great signals of a market that's going to roll over. I wouldn't expect to see them until we start to see higher new lows. If I look at the Woody indicator, which is this where my arrow is, you can see all major indexes are in a bull mode. And this here was the 6th, which was kahunas across the board on the Monday that took us out of a sell mode into a neutral mode. And then on Wednesday, after the market, more kahunas, and we've been in a buy signal for quite some time. We are getting to the point where this is, typically we see about 13 days before the market seems to want to roll over or take a breath, and we're really getting to those points now. If I look at sectors, you could see that last week we had some weaknesses in staples, healthcare, and utilities, and what is that one? I don't remember what that one is. XLU, XOK, technology. And now the only thing that's showing green, yellow is healthcare, and it had a big move up this week. Healthcare may be on the verge of moving up, at least within the percent B in bandwidth. Canaries in the coal mine, we've watched these for years, taught to us by Ian, where he suggested we take a list of market leaders, make an index of them, and with the knowledge that when a market rolls over, it's typically the leaders that fall first and hardest, and that they may give us a signal as to when the market was in trouble. And the same thing the other way around. If a market's recovering, one might see them move first as well. So what do we see here? We see, first of all, we've gone to a weekly bongo green. That's one of my strong buy signals. We are sitting right on the 50-day moving average, actually moved up above it from a doji on Friday. A close above the top of that doji would be a high close doji and a very strong buy signal. Volume is sort of sideways, relative strength is sideways. But this is much more impressive than it's been. It suggests that perhaps the generals, the leaders, may be on the verge of a breakout. That would be extremely bullish in the market. So think about this. You could have steels and bank stocks that have been leading the way pause to refresh, come back a few percent, and have the leaders of Google, which looks great, Netflix, which has been strong, Apple looks good, and maybe Facebook, Baidu, Amazon help, and this market breaks out and you continue higher indices, but you ease off on some of your overboughtness. So that's something that I'm going to be looking for. The red arrows are the red arrows. FOMC rate decision is currently at 2 p.m. on the 14th, which I believe is Wednesday. Yes, there's some energy. I think there's a bigger news coming out this weekend will be whether or not the non-OPEC countries agree to follow the OPEC cuts in production. Not a big earnings release. Now, there are some stocks that you probably own, and you need to know when they are. Adobe's obviously widely owned as one, and we'll let you take a look at that. As I've said multiple times, it's a judgment call to hold stocks over earnings. For example, I had a position on AVGO. What I did is I sold puts and bought a vertical spread and paid for the vertical spread of calls from the puts that I sold. And as we went into the week, I covered my puts, which were somewhat profitable, and held on to my call position. And Avgo had a big day, and that helped me on Friday. But I thought about how I was going to manage that position. I don't want to go into earnings blind. I may hold them, I may cover them, may sell them, but I know what I'm going to do. It doesn't happen by accident. And that's what I suggest you do as well. Thoughts, major markets continue to melt up, but topping signs certainly in metals and banks. Healthcare starting to move, technology stirring after those earnings. Dollar continues strong. VIX dropped. Overbought markets typically get more overbought, but several of my indicators suggest pausing to refresh, especially in some of the leaders, while the laggards try and catch up. And as always, trade the market we have and get, not the one you think we should get. As I said before, I've put my week charts of the week on hold until I know that I can do this weekly. Because if I give you charts and don't tell you what I'm doing with them, I'm not doing what I intended. We'll do a top-down review, look at some of my scans, and then we'll say goodbye. All right, let's take a look at TradeStation. So in TradeStation, I'll do a couple things. And one of the things I'm going to talk about today is something called the Commitment of Traders Report. This is something, I pretty much learned this interpretation from John Person long before I moved here. And what I remembered was that in 2009, the market was in a free fall, 2008 rather, into 2009. And if you look at the market during that period of time, let's see if I can make this happen without screwing it up. $10 says I screw it up. All right. Now, one more time. If I don't do it this time, I'm done. All right. So doing 2008, the market's in a downfall. And this is the E-mini futures. And futures buyers have to report their positions, and then they have to tell you what they are. Are they commercials, which might be hedge funds, and those are the blue guys? Are they, actually, let me back up. The blue guys are the professional speculators, who are the hedge funds and banks. The yellow guys are the non-professional speculators, you and me. And the red line are the commercials, and these would be people that, for example, I'm a corn farmer and I might want to buy an option against fertilizer so I can guarantee the price of fertilizer I have. I've got a herd of lean cows, and I may sell a call, which is a bearish move, or buy a put on my position because I want to lock in the price. It doesn't mean I think the market's going down. It may just be I'm doing it to lock in a price so I can buy fertilizer at a given time or sell my meat at a given time. So I don't pay much attention to the red line. What I do notice as the market sold off into 2009, the professional speculators were short the entire way down, and us were long. As we got closer to the bottom, the professional speculators went long. We pretty much left the market. As the market started going up, we were short the market. So that's pretty typical that one expects the folks like us, the non-professionals, to go the wrong way. Here's the market right now, obviously getting toppy. The speculators, professional guys, actually were long for a while in this run-up, and then they've been short, but not nearly as short as they've been in the past. And you notice we're still net long. The professional guys aren't always correct, and they're not always early, but I take heed when the professional guys are going short, but they did start to go long before we got to the bottom back here. So that's the commitment to traders report. What does it mean for me? It means that on Tuesday last week, because it's measured on Tuesday and reported on Friday, that there was still the professional hedge fund guys were still net short on this market. Now, this is my market analysis page. And this is, I have one that's just John stuff and one that I blend. I'm going to look at the blend. And I look at 5 different features. So let's pull up, let's switch this to daily. Let's pull up the E-minis. First thing I look at is the color of the paint, actually is the color of the arrow, the latest arrow I see. It's a daily chart, a weekly, and a monthly. I can see I've got green arrows on daily, weekly, monthly, so I'm a person buy signal in 3 time frames. That's bullish. I look at the color of the paint bar. Green is bullish, means I could be going long. Red is bearish, I can be going short, and blue is neutral. So when it's red, I shouldn't be going long, and when it's green, I shouldn't be going short. So I could see on the second thing is bullish on all 3. The third thing I look for is price in relationship to the envelope. And when I start to get above the envelope and I look back in time, I see that when we're above or below the envelope, we have a tendency to start going sideways and getting back in the envelope or having a reversal. So the fact we're above the envelope, that's a negative. I look at these red dots, which are above the daily and the weekly, and they suggest we might have some MACD divergence. Well, here's a MACD, and if you look at from, say, here up to here, the market's gotten higher, and we haven't set a new higher MACD. So that's the fourth thing. So we got 2 very strong positives. We're above, which is a negative. We got divergence, which is a negative. But as you can see, you can be divergent for a lot of weeks before the market sells off. Then the fifth thing I look at is my high jump bar, is how far extended are we from the major moving averages compared to the last 200 bars, or in this case days. And we're at 100%. So the E-mini is maximum extended. It's certainly in a buy signal, but a lot of evidence that this is long in the tooth, and I'm looking for this to slow down. I don't know when. I'm not ready to go short. I'm not buying a huge amount of puts on the S&P, but I'm aware to be looking for evidence that this market is going to roll over. So I am concerned. I don't think we go much higher without at least getting some sideways action and pausing to refresh. I look at the Dow the same way, the YM. I'm in a, let's see, green arrow going back to before the election, green arrow, green bars everywhere. I got the MACD divergence on the weekly. I'm out of the envelope. I'm also at 100. I say the same thing about the Dow. It's extremely bullish, perhaps too bullish, and may need pause to refresh. But I don't get in front of a train. I don't short just because it's too strong. I will wait for evidence before I would consider shorting this market, although I am going to look for rotation and may short individual names. I'll show you a couple of those. If I look at the NQ features, in a buy throughout, now this is different. I'm only at 79%. I'm green everywhere. I'm not above the envelope. I have no dots. So the NQ futures are showing me some strength and suggesting that these could run a while longer. Now I talk about my bongo, and down here I've got my daily, weekly, and monthly are all green. And very quickly going back to the E-minis, they've been all green for a while, as well as the YM. So I use the same type of timing indicator in both products. Lastly, we'll look at the Russell. Not lastly, that was a mistake to say that. And the Russell looks like the Dow and the S&P. It's at 98%. It's all green. I had a doji here. I got MACD divergence. I'm above the envelope. So again, reasons to be concerned that we might see something happen, and that continuation from this point without rotation, I think, is a little bit less likely. Again, I don't short just because I think that, because overbought markets will get more overbought. If I look at the dollar, came into a new buy signal on Thursday and a pop after a slight pullback. It's in a weekly and a monthly buy. A blue on the weekly, I think, is related to this pullback we saw here. The dollar is neutral. Daily bongo is red. Weekly is green. Dollar can go up from here. It's certainly not extended. If I look at the VIX, interestingly on the VIX, which is red with down arrows on all three time frames, we actually got some MACD divergence here. And look at this. The VIX is a little bit lower here. Not a lot, but a little bit lower. And the MACD barely is negative whatsoever. So the VIX is getting to the point where it might like to go higher. If you think about it, if the VIX is getting oversold and the markets are getting overbought, all it will take is a little bit of a pullback for the VIX to move up and the markets to be less overbought. If we look at gold, we can see gold continues to be in a downfall. Notice it's had some MACD divergence. It's getting lower. The MACD histogram is barely negative at this point, but don't buy it because it looks like it's getting to a point where it may reverse. Wait for it to actually show you a reversal, clearly in a sell signal throughout. And then black gold, oil, which had a big move on Sunday last week and Monday with the ratification, I guess, of the OPEC plan, or at least agreement to a plan to agree to something, but in a sell signal on the daily, but weekly and monthly buy signals. So oil is sort of confused. That's what I start with. I like to look at the sectors, and I don't know why I'm having such a hard time loading stuff here today. Got great internet access. Let's see if it'll load. Healthcare, as I said, starting to stir. A new buy signal on healthcare, certainly nowhere near the top of the channel. A buy signal on the weekly, still on a sell on the monthly. So healthcare is one that I'm looking to move. Financials has had a big run. Oh, come on, financials. At least you get. All right, we'll look at the FAS. You can see in a buy signal for a long time above the envelope, near 100% on the high jump bar. I think financials are risky here, although, like I said, I'm not going to short them yet just because I think they're risky. If I look at discretionary, also pretty extended at 99. If I look at technology, had a buy signal, went right up to the top of the envelope. Technology looks very strong here. Unlike the major market indexes, it's not at the high jump level. Industrials, again, been in a big run, showing signs of MACD divergence on the weekly. Staples, which have been negative, had a new buy signal on Wednesday, though still in a monthly sell. Materials have been super strong before the election. These have been big winners in Obama and Trump. MACD divergences on daily and weekly, getting long in the tooth. Utilities, another one that reversed this week on Wednesday. And energy has been in a nice move, especially with the OPEC discussion. So, I've got a sense of what's working, what's not working. Now I'm going to go into HGSI. So I go into HGSI, and the first thing that I'm going to do is go into Woodward & Brown user groups, look at Major Markets Plus, and I'm going to put the top-down view. This is a price and volume only view, mostly weighted to 1 day, but some 5-day and some 21-day weightings. And I can see where the strength of the market is. Dow Jones, the NASDAQ, NYSE, the S&P, these are all strong. That tells me I'm making money in the market. And what's weak? Gold, volatility, bonds, silver, and biotech. All right. Now I'm going to open up and look at a couple of these. I don't think there are any kahunas this weekend, so I'm just going to go into a simple view here and tell you what I got here. Up at the top, I've got my buy-sell signal, which is the weekly bongo is green. That's my buy signal. The second row down is the daily bongo. The daily bongo, I'll look for stocks that are in a long-term buy, and when I see the daily bongo red, I look for pullbacks to support and then buy them when they turn green again. So that's one way that I look for pullback stocks. The third bar and the fourth bar are two different ways of measuring the Hindenburg-Omen, and as you can see, we've had a couple of sporadic ones, and I think I've done this before. If I bring you back to 2009, that was more than I want to bring you back to. You can see, let's see if I can get those. You can see at the top of the market in 2007, we saw a series of Hindenburgs. And if I go back further, there's a period of time before that, earlier in the year, where we also saw some. So we had our warning here in early 07, and then in the early fall, October, we had a series of Hindis, and that was all she wrote. Most corrections follow Hindenburgs. That's why I watch them. They don't follow one, they follow a series of them. So as you can see, the S&P 500, I had written a sort of a wedge here, a triangle. It broke down and then came right back up and took it out. Interesting how it pulled directly down on the daily charts to the 200-day moving average. And this day here was, of course, that Friday where I said we were about to bounce. When I showed you earlier, we've had a big move up. We are getting away from our moving averages. Just showing you that high jump bar. This is the high jump bar, and it measures the closing price to the 17, adds that to the closing price to the 50, and adds that from the closing price to the 200, and then just plots that total and shows you how far you are today compared to the highest in the past. And as you look back, you can see when we get up to the top, we at least go sideways. So we are at that high jump bar when I expect things to slow down. So you got the candlesticks. The 8 is an exponential 8-day, and then you got 17 in green, 50 in blue, 200 in red. On a black background, you'll actually see a yellow instead of the blue because the blue doesn't show up well on black, obviously. Just checking my fantasy football scores. It sucks when your star running back, Melvin Gordon, gets injured at the beginning of the game. Down here, we also have these are kahunas, and the kahunas are sort of the follow-through day, our big move days on the individual stock, and their momentum. And then down here I have kahunas, I have eurekas in green and phoenixes in red, which are follow-through days for the market. So you notice that not only did the S&P 500 pull back here, and this is calculated on the NYSE, we had a eureka the following day. And then a couple days later, my kahuna went green, and that was a great time to have gotten into the market had you not already been there. So S&P looks strong. It looks extended. No shocker. Dow Jones Industrial, looks like the S&P didn't quite get down to the 200. Everything is green here. Getting extended, but it's still moving higher. NASDAQ, because of the NASDAQ 100, it's different than the NASDAQ itself. All the stocks together, which include a lot of small Russell stocks, have broken to a new high, getting extended, but beautiful pattern. If I compare that to the NASDAQ 100, you can see that the NASDAQ 100 has yet to set a new high, and I'll be looking for that this week, especially if some of those big stocks break out. Russell 2000 also has been moving up, and you can see it too looks like it's, a doji at the top. What I'll be looking for tomorrow, frankly, and I'm not hoping I get one because I still got some longs on the table, is that when are we going to see one of these? And when I see that, I'm going to know it's time to take more profits and start to think about going short. But at the same token, who says that we don't get good news out of the OPEC, non-OPEC guys, and we do one of these? I don't think it's a guarantee what's going to happen tomorrow. I think that's the bottom line to me. I don't know what's going to happen. I'll play the market I get, not the one I think I should get. If I go down and look at the dollar strength, we did have a pullback here, but we bounced back up. Is this the top of a box? This is an old high going back many years. Dollar's been in a big bull move. And if the dollar is strong, that tells you about gold. Gold is weak. No reason whatsoever without a change in the market to be long gold here, in my personal opinion. Again, I could certainly be wrong, but I don't know why I'd want to be long gold here. I'd like to see something show me a difference. That's miners. Here's gold itself, looks even a little bit worse. If I look at silver, which has a little bit more industrial use, also in a downtrend, looks better than gold, but not a whole lot. If I look at TLT, this is one of the shorts I covered. I covered it probably too long. I covered it in the 122 range. Bonds continue to sell off with rates going higher. I don't know why I cover that one. Sometimes I just get chicken and take my profits. Nothing wrong with profits. IBB, can healthcare recover without IBB? Looked good on Friday morning. Biogen IDEC was trading much higher on some data. Then as the day went, Biogen IDEC gave it up, and so did the biotech index, although it still finished up, I believe, on the day. Let's see. 1%. All right. And then the VIX we already talked about. It's been getting hit hard. And we'll look at the VIX. So we're right at the point that the VIX reverses from. When the VIX runs up, the market comes down. When the VIX runs up, the market runs down. When the VIX runs up, the market comes down. So the issue really is when you see that VIX rising, time to be concerned. When it's falling, it's time to be going long. When the VIX is low, they used to say look out below. The problem is you don't know when the VIX is going up, and you had a huge market move in here at the same time that the VIX was down. We just put the S&P 500 up, and let's look at that time frame. And this is where you had a big move in the market. So you can get big moves with the low VIX, but I do think one of these days the VIX is going to go higher. So now I've got my sense of the market. Again, I'm reiterating something I've said several times. Extremely strong market, extremely oversold, especially the Dow, the S&P, the Russell. The NASDAQ 100 looks interesting and certainly looks like it could be leading the market higher and allow some rotation out of some of the extended groups. But I am a lot less bullish than I was 3 weeks ago. Doesn't mean I'm selling things, doesn't mean I'm shorting, except for selected. Next thing I like to do is go down to the industry groups. And you can see in HGSI we have 172, led by airlines, and this is just price and volume. But let's look at momentum over the last 2 days. You can see I got 74 to the upside, and I've got only 11 to the downside. Let's look at some of these downsides, especially when you see that steel and raw materials have been big leaders. So here's Cliff. Now let's go into my webinar view. So now I'm adding things. Still got the weekly bongo, daily bongo, accumulation distribution. Then I have 13-day force, 2-day force. Here's that high jump bar. The red is a red candle high, which can be a reversal sign. Green is a green candle low. Then I have Bible gap ups. I have squeeze. I have MOBOs. This gray line is industry group. Same thing in here, except I had the Wilder PSAR reversals. Down here, I've got pocket pivots. I have on-balance volume with a blue moving average. And then down here, I have regular volume. These are my Eurekas, so this was on the market. And this is a Kahuna. This is on the stock. So let's look at Cleveland Cliff and talk about what the ultimate way to have played this was. This was your buy signal, probably right here. You had a break above the 200, a MOBO breakout from a squeeze, a Kahuna, and a Eureka on the same day. You could have waited and bought it here after it broke above the PSAR. So if you'd gotten long on that bar and you're still in it, you're up. Let's just take a quick look. Let's show you what kind of a run these stocks have had. If you had gone long the stock, just pick in the middle of that day and you're still in it at the close. And I'm in the buy. Hold on a sec. You'd be up 32% in 20 days. Not too shabby. Markets don't usually go up 1.6% per day. If I look at what I see on Cleveland Cliffs right now, this is indicative of a lot of them. It kind of looks toppy here. It's still above the PSAR dot, so it hasn't triggered a sell signal. OBV looks like it's starting to break below the moving average, but hasn't really driven much below. It's certainly something that's concerning, although it hasn't rolled over. One that I own is Tech. It's in different categories. It's got more than just ore. And you can see what, is this right? Yep. So Tech, this here is an error, but Tech rolled over. Now Tech, I've got 24 puts, so I'm already in the money on my puts, and I paid for them by selling some calls above. So I've had a huge run here, as have all of you that have a position in Tech. And if you remember, I gave you this about when it was about $4. It's certainly been one of the big leaders of this market run. But it did have some. It changed its name this week. I don't know what that spike is. That's wrong. It didn't get to above 33, or I would have been stopped out on my calls, I'm sure. So this has been on a big move. And if you look at it, you had a chance to buy it right down here. You had a chance to buy it right down here, where both were very strong times in the market. And notice that even with this pullback, my weekly bongo has been green the entire way up. So some of these stocks are looking weak. Take a look at these steel producers. Now, I've got to be a little nervous in shorting these things. Here's the index. So it's certainly an evening star-like appearance. But take a look at what stocks are here. If I wanted to short something, here's U.S. Steel. Again, I sort of have shorted it. I've got puts on it to protect my position, sold calls above. I did move my stops up, so right now it's not a big position for me dollar-wise, and it's covered. It's got great earnings per share growth coming in, still above its Wells Wilder dot, so it hasn't triggered a stop yet. But as I look at this, does that look bullish to you? Maybe it'll turn into be a flag and it'll go higher. That's what I think. AK Steel, rolling over. ArcelorMittal, big gap down. Nucor, looks like it's rolling over. So none of them have given off the pooch yet. None of them are in clear-cut sell signals. But if you're heavy into these metals, and let's just take a look at XME. I think you've got to be a little bit careful up here and raise your stops at the minimum. Maybe put your stop below the PSAR dot give it a little bit of room, but you don't want to give up your profits. In my case, I sold calls and bought puts to protect my profits. That's just a different way, and sometimes a much more expensive way. The managed care initially moved up with, well, actually it's moved down because they're concerned Trump's going to take away Obamacare. So they sold off, and then they've moved up strongly, and they look weak here as well. So managed care looks weak. I care more about what's strong. So let's go back to the industry groups, and let's look at force down, 2-day up. So I'll just go quickly through these. I think banks are another one I'm a little nervous of, but let's take a look at banks. A lot of these will have the same pattern. Big moves up. All right. Big moves up. Here's that Friday, Monday, Tuesday, and here's Wednesday. So even if you had bought this at the end of the day, on the Trump victory day, you are up 11% in 21 days, 0.5% a day on the banks. That's U.S. Bancorp. Here's PNC Bank. Here's the day after the election. You bought it at the end of the day. You didn't even buy it early. So you missed the biggest day, and you're up 13% in 21 days. Private Bancorp. Late to the party, but it's at the party nonetheless. So here's the day it broke its PSAR. If you're still holding it, 18% in 20 days. These stocks have had a big run. It's hard for me to jump in. Here's Regions. Again, let's find the 9th. Here it is. Let's say I bought it bad at the close of the day when I should have bought it early. I'm up 26% in 21 days. So I am holding KRE, and I'm thinking about when I'm selling my KRE, because this is not necessarily a fast mover and sort of a hanging man up there. I've raised my stops on my regional banks. They are incredibly strong still. I'm not saying that they've died yet. I'm just concerned. I'm raising my stops. Exploration production. They've had the benefit both of being a Trump stock as well as OPEC. And you could see 1, 2, 3, 4, 5 moved up sideways this week. EOG Resources, certainly lower left, upper right, kind of loose. Not my favorite looking pattern. Hess, big move up here. Chesapeake. These stocks have had runs as well. Exciting, my new office for my company, we're opening it up. We've been in temporary space for 18 months while we've been building out. My partner's name is Raj, so they've called the office the Raj Mahal. Moving in this week. 11% in 21 days. So these stocks have had a big move. Am I seeing anything that says buy me now and a great setup? No. The index looks better than the stocks, so left, upper, right, and a lot tighter. This is all over the place. Anadarko looks kind of interesting, looks like the index. So I don't see anything here that makes me want to jump up and buy. And that's the oil and gas. That's my number 2. Services. I'm long Halliburton, but I like some of these drillers. Here's Noble, NE. I like this one. It's in a weekly buy signal on Bongo. It hasn't run so much that it's too far gone. I'm putting a buy stop somewhere above that 200-day moving average. I had a kahuna on Friday. Everything is green. If you follow John Person, you'll also know that that's a high close doji. If I go into John's stuff, it was one of my buy stocks today. And you can see they had a high close doji on Friday on the daily. OBV is strong on weekly and daily buy signals coming out of a bullish MACD divergence. I like Noble Energy. Atwood is another driller. It's got a huge short position. Rig has had a big move already. Here's another driller. Diamond Offshore looks a lot like Noble, a driller. These drillers look interesting. Halliburton, which is what I own, has already had a nice run. It's kind of gone sideways the last couple of days. There was one I thought was crazy. Seadrill is one that's had a huge fall, and actually I thought looked kind of interesting. Let's just see if I can pull it up. So I'm looking at Noble, but here's Seadrill. Big move up, everything is green, and Diamond Offshore is another one. I'm looking at some of these drillers on Monday. Diversified banks, so these are the big banks. Bank of America. These things just keep on going. I'm long, my position, as I said before, is Bank of America. This is probably the 9th. If I bought it at the end of the day on the 9th, I was already long, but if I just bought on the end of the day, 19th, I was still in it. I'm up 28% in 21 days. Think about it. We're not talking about rah, high growth technology stocks. We're talking about banks. How much and how fast can these run? I'm not selling them. I'm not buying puts. I think these are the early innings, but I expect a pause. JP Morgan, does it make it to 100? Citigroup, even Wells Fargo, who rips off their employees, looks good. So I look at the big banks. They look great. Semiconductor devices, Broadcom, AVGO, I've positioned that, had earnings come out this week, gapped up. What I was doing is I had a position that was sold puts underneath the 200, and I used those puts to buy a call spread. My call spread was a 160, 180 call spread, and obviously it's in the money, but unfortunately, because I only had 180, it's already above the top end, but it's been a profitable move. It's right up at resistance where it closed. I think it's got to open and stay above this on Monday, or I'm going to probably close my long position and maybe just keep that put, that call, the higher price call, as a short position. Broadcom. AMD, big move up, didn't do much on Friday. InventSense looks incredible, except it's probably more because it's the talk of a potential takeout. And Micron looking a little toppy. Large Pharma, is Large Pharma back because Hillary lost? Look at Pfizer and BMS. So here's BMS. I like this one a lot. Also, I think it's made to my buy list here. Bristol Myers Squibb. It had a new PPS buy signal on daily. It's in a weekly. OBV is strong, coming out of a squeeze. I like this one a lot. I also and it pays a 2.7% dividend. And I also like Pfizer, which I don't like as much as Bristol Myers, but it pays a 3.8% dividend. So Large Pharma looks interesting. Packaged food, not my favorite place to buy stuff. Don't know much about these, so I can only comment on the charts. Flowers broke out on Friday. More info on the web. Go to FinViz and see what it was all about. They settled a class action lawsuit. All right. So maybe it's time to look at flowers again. Big move. Moves like that usually backfill a little bit before they go higher. Tyson Foods, Kraft, Mondelez. I think this whole group was pulled up because of that lawsuit. All right. Airlines have been strong. My play here has been Delta. Just take a quick look. And Hawaiian's the other one I have liked. American Airlines has been in a big move. It's at the top of its high jump bar. If I go back into TradeStation, let me just dump this into that. You can see it's got some MACD divergence. It's above the envelope in the weekly. It's at 100% of the high jump bar. You know, when I see things like that, I see sort of a spinning top. How much farther can this go without at least going sideways? Could go a lot farther, but I have to be careful. United Continental looks like the identical pattern, big gap up. Anybody think we're going to see one of these on Monday? I'd be concerned about that with that move. Could just be a breakaway gap and it's going to run up, but that looks like an exhaustion gap to me. A stock that's been up %, in 100 days. Gaps up like that, closes with the doji. I'm not real optimistic on Monday for United. Delta, you know, potentially doing the same thing. I used to joke that I buy Delta when it's 40 and I sell it when it's 50. It's above 50. I've got a pretty big option position. I'll probably be doing something with it on Monday, I suspect. Alaska, these things have had a great run. Hawaiian also looks like Delta. So airlines look like they're getting toppy. IT services, IBM is back. Breaking out to new high. IBM. Hard time buying it, but it looks pretty good. Accenture. These things have been sideways all year long. Getting close to breaking out to a new high, a sideways pattern. This is a much more interesting pattern, uptrend. Pullback, this was a time to buy it. Gee whiz, it was November 9th. What a shocker. Been in a big move, must be an infrastructure play. Kahuna on Friday, but it's pretty extended. And that's the problem, folks. We got a lot of extended stocks. I have a hard time buying extended stocks. Then REITs, some of these showed up as looking interesting. Let's see if any of these up top move off the bottom. 3.5% dividend. There were a couple that I liked. Marriott's had a big move. Welltower, that was one that I liked. Pull back, it's got to get above the 50. It had 3 kahunas last week. That caused me to pay attention. 5.2% dividend. Coresight, also a couple of kahunas, got to get above its 200, pays a 2.8% dividend. So I hope you're not that excited by what I've shown you, because I've shown you a lot of stocks that you can't buy. This is the problem with a market that's this far extended. Now, in TradeStation, I run a scan. Let's see if I can find it. And I look for stocks above the high jump. So let me figure out which one it's in. Extended via high jump. So this scan looks for stocks who've got price and volume, price 7.5, volume of 150,000, and it's over 90% on the high jump bar. So these are extended stocks. There's about 2,800 stocks in the universe. All right, let me go back to this. $1,974 stocks in my universe are at their high jump bar. It's hard to buy stocks at the top of their high jump bar. I do run a series of scans. Some of my favorite scans are the John scans. Scan number 5, for example, finds me a daily buy, weekly's in a buy mode, and volume is at a convergence. So let me show you what I mean by that. So here's a stock that's pulled back some, pull back, Sucampo. Of course, I got stopped out Friday and then or Thursday, and then went up Friday, but bygones. And what volume convergence means is even though price has been selling off from here and here, volume has been strong. So these are stocks that I like to buy, and I'll be looking at SCMP again. But here's a whole list. And so I wanted to highlight a couple of these. Let's go into my screener view and look at the stocks that I'm interested in on Monday. I'm going to show you a couple here. I'll look at them in HGSI, and then I'm going to say goodbye. McKesson. McKesson is a healthcare services company. They're classically considered a drug distributor. They also do a lot in the land of technology. I've competed against them for a long time. I have a lot of respect for them. And why I like the pattern, stock price has been going down. The histogram has been coming up, as has on-balance volume on the weekly, and then the John Person volume indicator down here. So there's a massive divergence at play. And on Friday, I got a weekly buy signal on McKesson. On the daily, I've had some MACD divergences. I've got volume going up. I'm coming out of a squeeze. Volume looks strong. I like McKesson a lot. I mentioned Noble Energy already, so I'm not going to go there. I mentioned Bristol Myers Squibb, and you could see a new daily buy signal coming out of a squeeze. And then a healthcare stock that you might want to watch. Well, here's AmerisourceBergen, which is in the same industry as McKesson. Similar pattern, selling off here, while the histogram and volume are getting stronger. I like this pattern a lot. I like McKesson a little bit more. One of the confusing things about ABC is it's sort of being bought by Walgreens, or Walgreens has a put option. Here's my buy list from the week. These were stocks that made my list that I'm going to watch. Many of these we've looked at already. And then let's look at my favorites of the week. You can always stop the movie if I'm going too fast. So just one more time. McKesson has been in a downtrend. It's moved up off the bottom. Got to clear the 50 for me to get interested. Mobile breakout from a squeeze and a kahuna. I know how the bongo is calculated. If it gets above the 50, it'll probably turn green on the bongo. That's one that I'm looking for, but it's going to have to close above the 50 to be interested. Utilities, NRG Energy looks like it wants to go higher. Multiple kahunas. It's turned green on the bongo. Again, I'd like to see it get above and close above the 200 before I start playing there. I mentioned Seadrill Energy. It did break above the 200. Couple of kahunas. Everything is green. Look at the industry group strength. What have I got to lose? It's like buying a call. It's a $4.50 stock. I have $4.50 to lose. Pays an 8.9% dividend, and apparently it's still paying 1, although the dividend's a lot smaller than it used to be. Emergent Biosolutions gapped up on Friday with a kahuna, everything turning green. This is the kind of news that on a stock that's been lingering, I get excited by. It's a small cap stock, or a small stock. It's got a 1.1 billion market cap. Emergent Biosolutions support HHS, that's the government, anthrax preparedness strategy with up to $1 billion in biothrax deliveries. That says that they got a $1 billion multi-year order on a stock that's got a market cap of $1 billion. So EBS, I'm on a board of a similar company. Don't know anything specifically about EBS, except a lot of their funding has been by BARDA, which is the biological and it's a government arm that funds development of products to help with biological and other weapons of terror, nuclear, biological. And so they're not taking debt, they're getting grants from the government. At the same time, they've developed other products commercially. And so a lot of their money, though, comes from the government. And then the crazy thing is, once you develop the product that the government paid you to develop, then the government pays you lots of money to buy that product. So cool. So EBS, you can see it was a $44 stock. It sold off hard on questions of whether or not they were going to maintain their government funding. I think this thing goes way higher. EBS, it's a story stock, and that's why I like it. ComScore is a technology play, information services. Sideways, broke above moving averages, a moment break out of a squeeze, a couple kahunas, everything looks green. This one looks interesting to me. Here's another driller, Pacific Drilling, breaking above. Now let me point something out. I've showed you a bunch of stocks that have beaten up that are showing signs of life. We have a word for those stocks. They're called laggards. There may be laggards for a reason. It is difficult for me to come in and buy Nucor Steel at this price. Okay, it's had a big run. To buy Reliance Steel at this price. To buy U.S. Steel at this price. To buy TCK at this price. Up to ECK, they've changed the name, I forgot. To buy, what's been another big mover of mine? Bank of America, to buy it at this price. So I'm either going to chase unruly dogs that have gotten extended, I'm going to stay out of the market, or I'm going to look for stocks that have not run yet. So I've got a bunch of laggards here. Laggards lag. That's not necessarily a great sign. Here's a specialty chemical company, W.R. Grace and Company. It's in a downtrend. It actually looked great on person stuff. So let's just take a quick look at why I chose it on one of my buy stocks. It's got bullish divergence. It's got a new weekly buy, daily buy, strong volume. I like William Grace a lot. But all these stocks are stocks that are that have been under distribution, some of which have new buy signals. So be careful out there. You've got a lot of great looking stocks that are way extended. I have a hard time buying them. MSCI looks nice. Pull back to a major support in a squeeze. Move up from here. This could be interesting. You got a lot of stocks that have had big moves. I tried to find some stocks that might be lower risk because I do think that we're going to get to a point that this market is going to take a breather. Again, lots of great stocks. I listed some of the ones that I liked here. Let's just go back to the indexes. Let's pull up that S&P 500. Let's go to a clean view here. I just have my moving averages. So let's just dissect this a little bit. From closing to closing, I'm up 8% in 24 days. Back here, from closing to closing, I was up 9% in 50 days. From closing to closing, 15%. So we could run a lot higher. My concern is that we are very extended here. I'm looking for a pullback, even a pullback into this range, into those moving averages, and then we move higher to year end. Be careful out there. It's an extended market. Find some stocks that aren't overextended. Protect the positions you have. But let me reiterate, I am concerned that this market is overbought. As I said in the beginning, overbought markets have a tendency to get much more overbought. Have a great week, everybody. If I don't do this again until after the holidays, Merry Christmas, Happy Hanukkah, and have a Happy New Year.